Hey, it's Bill Gross, the LA probate expert, with my weekly real estate market review. Will mortgage rates cool the housing market? Well, there's a lot to unpack here, and let's take a quick look at it if we can. If you follow me, one of the things you know is I don't predict the future, but we want to look at the current data to see if that tells us what trends are happening, what's going to happen going forward. One important trend I wanted to emphasize now and kind of steer my buyers away from if I can is a move towards townhomes or small lot subdivisions. In my neighborhood, I live in South Robertson in West Los Angeles. On the other block, in a neighborhood where they've been taking the older, modest homes built in the 20s and 30s, demolishing them and building huge, you might say, McMansions, 4,000 square foot homes, 2 stories, all the amenities. Well, that's been common for the last few years. It's getting a little harder to do. And so now, builders, there's another product called small lot subdivision where you can take a normal size lot, maybe 6,000 square feet, normally for one house. And that's kind of small for such a big house, but that's what they build in our neighborhood. But they allow them to build two houses on that same lot. I had another client on a property on Wilton where they had four houses on maybe about an 8,000 square foot lot. And the idea is that the city wants more housing built and they're making it more economical too. The problem is, as a purchase, when you people look at those properties and compare them to houses as a good alternative, and they're priced pretty closely because they're brand new and have a lot of amenities. The problem is that the physical properties in a house, the concrete, the wood, the nails, the metal, the glass, go down in value over time as they're used. And but the land is what appreciates in housing and why people are attracted to it as an investment. And so these townhomes or small lot subdivisions, I think, kind of trick buyers into thinking they're kind of getting a house when they're really kind of not getting as much house as they think they are. And take a look at the statistics, because this is not just happening in Los Angeles, but it's actually national. And you can see that the townhome construction is just going up tremendously, and the percentage of the market in the townhomes. If you go back pre-pandemic, it's always been below the level we're at now. And when was it higher than this? Of course, right before the last run up and the big drop in the real estate market. So more townhomes being purchased, I think, typically is a sign that the market is starting to lose a little steam or slow down a little bit as buyers settle to for alternatives to high prices, but don't fully appreciate what they're getting into. Now, let's talk about the financial markets. Also, I think typically consumers get things wrong in that they think they're going to make money when they're not and are scared to when the opportunities are good. It's interesting that the stock market kind of bets against consumers. If you look at the movie The Big Short or the story of Robin Hood recently, really what you have is, I think, big Wall Street firms get consumer accounts and kind of bet against them or front run ahead of them to execute trends to their consumers' demise. It's kind of like being a tourist in Las Vegas and playing poker. When you sit down with some friendly people at a poker table, by and large in Las Vegas, those players are going to be professional. They know what they're doing. They're not going to tell you they are. They're not going to act like it. But when you walk in to play, you're not playing against other tourists. I think real estate can be that way as well. And take a look at, I think, interest rates and sentiments of consumers over the last couple of years. You'll see that consumers, and this chart shows the net number being negative. How many people thought it was a good time to buy in the red and a good time to buy in the blue, bad time to buy in the red. And over the last few years, consistently, consumers said it wasn't a good time to buy. And what do we know for the last period of the pandemic? Fortunes have been made by the people who looked at the numbers rather than just the emotional sentiment. So in business, we always want to try to look at the data, the numbers. And I think in real estate, it's the same thing. What's the cash flow? What's the cost of the product? Can you afford it? And again, the biggest difference in the market now versus 2008 and 9 is when people buy a house, they have to be able to afford it. By and large, they have to qualify for the loan. More importantly, the loans they're getting are almost always 30-year fixed rates, so they can afford the payment. Whereas in the past, not only was the payment going to go up, but they were qualified at something they couldn't afford. So when it went up, they were caught from behind and unable to make those payments. That's not true today. People today are buying properties that they can afford. So the other factor, I think, that the sentiment, buyers still have not overbought because they've been very cautious, while professional investors and experienced buyers have taken advantage of the market. Another factor that's stopping a crash from happening is the lack of negative equity. There are less homes that are upside down. And if homes aren't upside down, it's not possible for there to be a crash. When there's a crash is when so many home buyers just say, well, I'll walk away from my property. There's nothing in it for me. And then investors swoop in and pay cheap prices, causing the overall market to go down. Well, we know in the last year that the number of people who had negative equity went down by 30% last year. In fact, only 380,000 homes in America today have negative equity. That's not even a month's supply of sales. Even if all those homes went to foreclosure, it would only add to our inventory about 2/3 of a month worth of inventory. We'd still be near historic record lows of inventory by historical standards. So we don't have that negative equity that's going to cause us for rates to go down as well. All that said, I would have said to you normally at this time, the market's moving along nicely and be careful. And boom, what happened? Rates jumped up on Thursday in anticipation of the Fed meeting last week. It was amazing. Mortgage News on Wednesday had a headline that the drop in rates was causing an increase in applications. And the next day ran, the rise in rates is causing a drop in applications. The market is very sensitive to interest rates. And if you look at the numbers on Thursday, you can see that we again popped back up to record numbers, and we closed the week at 4.29% as far as new mortgage rates you can get at that time. So what does all that mean? Well, if you're in escrow and you're locked in your rate, you want to make sure you can close on time so you can take advantage of that great rate. If you're in escrow as a seller, you want to get the buyer locked in. You want them to waive their contingencies so now the money's at risk. And if, in fact, the mortgage rates do go up, they're not going to back out on you. It's still a great time to buy because of the low rates. For the most part, payment opportunities are better than ever. They're not as good as they were maybe 30 days ago. For sellers, it's still a good time. There's still healthy demand for property. I had showing requests on my listings over the weekend that we set up for next week already. So if you're a seller, it's still a good time to sell. But I would say if you need to sell, don't wait. Get it priced right, get it on the market. I see so many sellers lackadaisical about getting their home ready. And I don't know, rates could bump up another 0.5% or 1%. It could be a whole different ballgame. So today, market signs are cooling off. Is it crashing? I don't see a crash on the horizon today. But who knows, with invasions and war and Fed rates, anything can change. So if I can help you, if you have questions, call me, text me, email me. My contact info is below. And as always, make this your best week ever.